investment platform that caters for all different types of the components associated with the ASX, and Ben will go into great detail about that. We've got the Lynn Partners, good supporters, fund out of New York. They sponsor all of our conferences. So obviously the guys, Jeff is not here because he's in New York, probably looking at loading up in the tech market, I imagine, later on today when New York goes into business. We've got a new sponsor. It's called Bird. There's its logo there. Interesting. The guy running it is Lockie Horn. He should be here because he was on the Midnight Horror out of Perth into Melbourne, so he's probably just recovering at the moment. But he's got a draw, so go and see the girls at our front desk, Charm and Prue, where you go into the draw and you can win an electric scooter. You win a voucher to buy an electric scooter, which electric scooters are very important because obviously there's a tech component, but most importantly, there's lithium and all those great metals that go into the tech market that are really important going forward. So that's our sponsors. Obviously, we've got some great support from our media partners. Chapter One's here. And speaking of Chapter One, Dave Tasker has been part of this event since day one. So that not so much that this bothers you guys all sitting here because you're the live audience, but we're live streaming this, and to the 200 or 300 people out there that are streaming this from all parts of the world. For those back in Perth where it's probably 5:30 in the morning, thanks for your support. I hope you enjoy listening to the 18 companies that present. And I'm now going to hand it over to Jerry Gannon. It's great to see Jerry back, and look forward to another exciting TechKnow Invest Roadshow. Thank you.
Thank you very much, Jaxon. To our first speaker, Ben Williamson. After spending a decade growing and exiting businesses, Ben co-founded Fresh to help connect public companies with the investors who knew and loved their story. After working on more than 2,000 ASX placements, they now make it easier for public companies to be public and helping investors see the companies behind the codes. Please welcome Ben Williamson.
Thank you very much. Good morning, everyone. Might stick with the perfect. So welcome this morning, bright and early in Melbourne. If anyone's suffering like me from hay fever, it's a fun day to get up. But obviously, just quickly, this is not financial advice. But if you need more of a disclaimer on that, come talk to me later. So my name's Ben. We started Fresh about 4 years ago. You might have seen Fresh equities in the market, working on placements or rights issue shortfalls. We've worked on about 2,000 deals, just over 2,000 now, really helping people who already had high conviction get into the companies that they already knew and loved. They just didn't seem to have the right broker account on the day. Through that, we've given no advice and helped $600 million of additional demand sort of flow through, and really tried to highlight the company that sort of sat behind the stock code. About 6 months ago, we launched a new platform that really looked to do this over the whole year for companies. So we've got 30 ASX companies now, as said, helping it easier to be public. We help 75,000 shareholders get access to management on a daily basis if they want to. And we deleted our transaction fees to really get behind the support there and help companies and their issuers and their lead managers connect. This is sort of the topic of the conversation today, the difference between the company and the code. Normally, when I talk to investors, people think of these things as the same business, the same item. And when I talk to companies and when I talk to investors now, I really try and highlight the difference, right? A public company, I sort of say, gets split into its two parts. It's the company on one side. Now, I can't see Iggy in the audience, but I know he's here today, so I'll use him as an example because he's presenting and he's also a client of ours. But Altec is the operating business, whereas the code is that 3-letter item that you can buy and trade. And whilst they're definitely linked, they're definitely separate as well. So today's goal, if I can set one, bless you. for everyone is to try and see the company behind the code. And you're in a really good spot because you get to watch them present, you get to ask them questions out on the floor, and you really get to see the difference between the two. So this really came from learnings from those 2000 deals, where we see that people really tend to invest in companies, but they trade codes. To me, investing in a company has a better return on your time, which is probably more important an asset than the financial outcome. And I just wanted to sort of highlight through this the different ways that you can try and get a view of the company behind the code. And again, great conferences like this allow you to hear from the company, allow you to ask questions, get a sense of their journey, understand their market, understand their timing. Clicky, clicky. Not going. Just give us a second. There we go. So I've highlighted this, but just to hammer it home, you know, companies and codes, they tend to have different revenue. One's revenue is income, the other one's capital raising. They have different people sometimes working on it. So you might have IR staff on one side and marketing teams on the other. There's typically different impacts. So market impacts might have operational flows, but they have, you know, instant daily impacts to share prices, etc. And I tend to find that the success on the company side is definitely longer impact, longer lasting. This is a much more important issue today than it was sort of 20 years ago. You know, you don't tend to call your broker as much to trade these days. A lot of trading is done online. It's done on a screen where you're really just presented with that code. The other thing for online brokers, whilst they're still remunerated the same as traditional brokers, they're much more incentivized to get you to trade more actively. So they will prefer you to trade one stock 15 times in one day than hold it for 15 years and make many times your money, right? They get paid on that turnover, not on accretion. They don't have, like, you know, referral networks of good tips and good insights that traditional brokers do. This isn't a push for traditional brokers over online brokers or vice versa, but it's a highlight of the change in the market. So it's really important now more than ever to get past that sort of first screen. And this is an example of that first screen. So if you go look up at a code now on ComSec, this is what it looks like. And if you take a second to have a think, what does this tell you about the company? Does it tell you anything? Could be any company. We know it's LTech because that's my reference point for today. But if you go a bit deeper, you do get to see the people behind it. You get to ask them questions. You get to see how they present. This is a bit of a self-plug because this is our product, the LTech's using here, which gives you the ability to view them, to listen to them, to ask questions and engage. But doing that extra step does yield a lot of benefits. And so I wanted to use a historical tech example to really sort of drive this point home. Now, if you and I look at this chart at any point, you probably look at it and think, oh, they had a bit of a pump, it dropped off, or the market turned. There's nothing in this chart that says that this is an exciting company. If anyone can see down the bottom and squints really hard, you'll see that this sort of ends around mid to late 2003. At the same time, if you got past this trading screen and you looked at the company behind it, even if you just went to their website, this is what you would see. You would see that 2 years before they'd launched the iPod and iTunes, and they'd had some middling success. It wasn't very big by any stretch. And in fact, if you look at this chart, you'll see that there in 2003, the number of units sold of the iPad was very, very small. And their success was to come a lot later on. But if you've taken the time to listen to Steve Jobs and get behind the story, and this is a nice, easy thing to say now, knowing the success that it's had, but at the time, the chart was still the same. And so you can see here with a zoomed out perspective, looking at an extra 5 years, that the chart had really run. And I like to think that a lot of the company success comes before the code. And by taking the time to understand the company, you can start front running the code a little bit. The last little thing I'll say, because I say this more probably for my own wounds, historical wounds, that we often see a chart like this and think, oh, yep, can see it now, but I'm too late, I've missed it. It's already run. You know, some of the best investments I've passed on are ones that I thought that where they'd gone from, you know, 5 cents to 10 cents and I thought the run was over. And I need to remind myself to be present, to understand why they ran, to think about their future again, and to not let that success that they've already had be a reason to say no. So I sort of, you know, I remind myself of the old Buffett quote, which we all know, I'm sure, but it's better to buy a wonderful company at a fair price than a fair company at a wonderful price. So if we go back to that chart and scan back out, this chart turns into this chart. And so we can see the 2 stop points that we had there before, and the second run is really just a blip on the radar. So I just want to use this as an example to really highlight and hammer home that the company is a very big indicator of where the chart will go. So the great news is you get to listen to and hear from a whole bunch of companies today, and you get to dive in a bit more. And I just want to leave you with 3 sort of areas to think about and position the company as you sort of go through. So these are good ones to note down in your notes. They're good ones to ask when you're out on the floor, during breaks and afterwards. But when I talk to companies and the people behind them, the first question I really like to dive into is why this? This is a lot of a time in question rather than a timing question. So as I said earlier, the time is more valuable to me than money, and money is very valuable as it stands. So if they could spend their time doing anything, why are they spending their time on this? What's driving them to do this? Why are they choosing it? What makes it special? What makes it special to them? I think that's a really big push. The next extension of that is, why are they the right people? I was talking to a company just recently, SES, that were doing a plastic alternatives business. And the CEO behind that spent most of his years in plastics, 10, 15 years in the plastics industry. So for him, this is personal because he's kind of trying to right the wrong that he set. And so he's going to have a lot more drive behind that. He's going to just double down that bit extra when times get tough. He's going to push through more than, say, I would in that business when I just don't have that same drive, that same passion. So it's not just people's history, but it's what's driving them makes it really important. And then the last point is, why now? 10, 20 years ago, if you're talking about lithium and you had this great deposit, there wouldn't have been much of a blip. Obviously, there's a big importance on it now. But getting that sense of why now, and also understanding the time factor of the company. Is this a 6-month opportunity? Is this a 6-year opportunity? It will really help you decide if you want to invest in the company for that time period, and also follow through, and it will set the expectations for you as well to judge your own return on investment. And most importantly, just have a bit of fun doing it. Time, as I said, it's the all important one. So enjoy yourself today and get around and see some people. Thank you very much.
Thank you, Ben. SensOre combines proprietary technology, big data, and technical excellence to provide exploration success. Pardon me. CEO Richard Taylor has held senior executive roles in the resources sector for more than 15 years. Prior to SensOre, he was CEO of ABx listed Tyriman, Australia, and held senior roles with Mineral Deposits Limited, Panost, MMG, and Oxiana, specializing in business development, strategy, and governance. Please welcome Richard Taylor.
Thanks very much, and thanks to Vertical Events for the opportunity to speak. I think I'll pick up on that last point and have a bit of fun presenting to everyone today. So it's talking about things that I'm pretty passionate about. And that is, I think people have been most interested about our story over the last little period of time as a mining technology disruptor in the emerging battery and minerals space. I think everyone's aware of the thematic that we need a lot more minerals to be able to build the batteries, the wind farms, the electric vehicles that we need for the energy transition. And I think I was just doing my own research over the weekend about looking at a house battery, an electric vehicle. And it's amazing to me that they're still not economic. The price of home batteries require a 10 to 12-year payback to be able to make them affordable. So that tells me two things. It tells me either that energy prices are going to have to rise significantly if we're going to be able to meet our energy transition requirements, or we're going to have to find a lot more metals to be able to reduce the price, the speed limits to growth on the energy transition to be able to make this whole thing work. Now, the IEA came out recently just to give you a bit of a comparison about how many mines are going to be needed to be able to meet just electric vehicle demand over the next few years. 50 plus tier one lithium mines, 60 nickel mines, 17 plus cobalt mines, and probably another 50 to 100 copper mines to be able to meet all of the copper and wiring requirements. This is simply stunning. We haven't been able to deliver this level of mine growth in the last few decades. So something fundamental is going to have to happen if we're going to meet these supply challenges over the future. Now, exploration budgets are responding. We sit in, as a mining technology company, and I'll get into what we do a bit later, we sit in a really special spot, selling a lot of our technology and services into the Australian market, into Africa, and into the Americas. But what we're seeing is that budgets are going up, but discovery rates are not. So we're doing the same thing that we've been doing for years. And this is a toolkit that's largely designed around finding things that are sticking out of the surface. So going and sampling rocks and minerals that are not covered by sand or sediment. So we're still focused on that, maybe a third of the continent in Australia that is outcropping on surface. And we haven't been able to push under the areas that are covered by sands or sediments, etc. The undercover where all these new mines are going to be able to come from. So we need to do something different, and SensOre is part of that technology change that will make that difference. Just a bit about us. We listed on the ASX back in February. Not a great time to list, but we got it away with some passionate people and big companies that have been backing us. We have BHP Ventures, which has been a big supporter over a long time. We have Gold Road, which is also a client and a joint venture partner on our register. And we have Deutsche Rohstoff, which is an oil, gas and lithium company out of North America who are backing us. And we're tightly held. We've got a lot of our stocks still in escrow until 2024. And we're generating cash from our technology sales as we speak. So we put out a quarterly just recently. Just post-listing, we finished off, we used the funds to be able to complete a lot of the R&D and development of our technology and be able to scale that approach outside of Western Australia, South Australia, Victoria, to build up a technology offering across the continent and internationally. We also acquired a company called Intrepid Geophysics, which is Melbourne-based in Brighton. Very exciting, world-leading company with great technology stack that was largely academic. We needed to invest the money to be able to put into user interface and user experience to be able to scale that technology. So in terms of revenue, cash and invoice, we did about 1.3 million in the last quarter, and we're looking at trying to point towards strong invoicing and total contract value going forward as we grow our client and other offerings. So we work with many of the majors. We work with BHP, we work with Rio, we work with Anglo American, we work with a really top quality client deck who are with geologists and explorers who are looking at doing something different, using the advantages of artificial intelligence and machine learning to be able to interrogate their data and be able to make more discoveries for less money. So what our technology is a data aggregator, essentially. We use this as our data platform called the SDC platform. So if you can imagine a big MRI of the Australian continent or North America, we can look at all different signals that are associated with discovering what's underground. So we use the geology. We take the collective experience of geologists going back decades, the reports, the maps that have been written. We use machine learning to extract that information and turn it into a quantitative data layer. We marry that up with the geophysics, sort of similar to the MRI, with gravity, magnetics, airborne electromagnetic approaches, magnetic tensor surveys that we have done to be able to image into the continent's surface. And then we look at the surface geochem and the downhole drilling database. So for the first time, you can bring together the three disciplines of geological information and envisage the entire continent at a regional and a continental scale within this platform. What we do then is we hang off that some fantastic applications that allow our clients to be able to interrogate that data and be able to make new discoveries from applying these technology. I was talking a bit more about our technology, the data cube, etc. So if you can imagine carving up the Australian continent into 400 by 400 meter cells, which is really about a prospect or a drill size location. And then populating each of that layer beneath it with the 2,500 layers of data that we have in relation to those three main data sets. And then using the power of big data to be able to make predictions about the missing data sets. So the problem with applying machine learning and big data to geoscience information is that it's sparse and expensive to collect. So you need to make that data work for you and be able to use prediction to be able to reduce the amount of drill holes that you need to do to be able to make a discovery. So just for example, in Western Australia, we have 8.5 million surface samples. We have more than 280 million assays from drilling. That is all going to inform our data cube and available to clients. When we have that big data cube, we need to go and train it on something. So we need to go and let's say, what are the fingerprints in that data that we should be looking for? And as a geologist or a geologist with a background, when they go and approach a project, they're using the number of deposits they've been and seen. They're using the academic papers they've read, their knowledge data set about the types of deposits that they're looking at. Whereas we differ, we can go and look at 10,000 different occurrences for gold in Australia. We can set the computer to be able to analyze what are the signals in the data sets that we're looking for to be able to fingerprint that deposit and then look for that deposit within the data set and deliver that to our clients as a target that they will test. So we also have the ability to be able to put all this information online. We've been working with a group called CGI to be able to put a portal for our clients to be able to access this information and interrogate it. Here's just a visualization from that product. It's going to be going live before the end of the year. And it's an exciting opportunity for people to be able to see all of that public data or all of the proprietary data in one format for the first time. We also work, I guess, the tools off that back. We've got a series of pretty exciting ways of interrogating geophysics information called Intrepid 3D, which allows you to invert gravity and magnetic data. It's not available in any other software packages that we have. We've also redesigned the way gravity and magnetic data and geophysics data is processed. So, you know, back when the Alexander Graham Bell was designing the telephone, a lot of the mathematics behind removing noise from crackle in handheld lines, in direct lines, etc., were specified for the telephone. And we migrated that approach to interrogating gravity and magnetic data. So all the shortcuts when we didn't have computing capacity, all of the things that we did to be able to remove noise in that process, those mistakes have been moved across to gravity and magnetic interpretation. So when we look in depth slices at deeper levels, we end up with a lot of noise within our approach. So some of the brilliant people at Intrepid that we work with have gone back to the original mathematics using the 19th century mathematician Cooksey and redesigned the way that we interpret geophysical information from scratch. And so this gives you much clearer resolution pictures for our targeting associated with it. The advantages of our technology, less drilling. So less land disturbance, less CO2 used in drill rigs, etc. Removing the greenhouse footprint of the sector. We're really focused on the tech metals. So our technology is around how you find things that are hard to find: copper, nickel, lithium, gold, etc. We don't work on the bulk commodities like iron ore or coal. And we also make sure that it's getting harder to get access to land in Australia, working through the relative permitting processes. So by using more data ahead, we can access those areas and be able to reduce the land that you have to apply for. I think what we're trying to do with our technology is improve overall success rates. So in peer-reviewed papers about exploration results, between only 0.3 and 0.6 of greenfield exploration projects result in an operating mine. In the oil and gas space, this is around 20 to 30%, and they invest more heavily in data science before drilling a first hole. Even in the brownfield environment or best-in-class exploration, success rates are only around 3 to 5%. So what we want to do with our technology is move it higher, move it to 10%, move it to 15%, get it closer to what's happening in the oil and gas space. And this will have means of being able to generate the discoveries that are required to fill that yawning gap in the new discovery rates that we see coming ahead. A lot said already this morning about lithium. I just wanted to talk a bit about our joint venture with Deutsche Rohstoff in Germany. They have a group called Prime Lithium looking at downstream lithium battery production in Europe. We have a joint venture where we're acquiring and developing lithium assets in Western Australia. We have 3 lithium tenements under our own banner at the moment and are working on filling a number of joint venture opportunities, which I'll be talking about in coming weeks. We have an exciting lithium portfolio development. As a result of work we've been doing on nickel targeting for the likes of Chalice and for BHP, we've developed some of our own targets that we see are particularly exciting. The Aurelia project is a joint venture with Chalice. We just drilled the Moonara project there in the Nullarbor. This was a target that was under 400 meters of cover with no known historic drilling. We predicted it to be a carbonatite or an IOCG target. We hit it within 30 meters of where we said that from the geophysics where it would be. And we've been able to successfully prove an IOCG signature on that area. So it's one drill hole in a 35 square kilometre target at 400 metres of depth and achieving it within the 30 metre window to be able to do that. Where we drill next will be the exciting thing for that program. We've also tested a lot of our targets for gold. We've drilled about 10 of the gold targets that we generated earlier. 7 of those have come back with mineral systems, gold mineralized systems. Mount North Darlow is our most advanced with significant gold mineralization encountered at bottom of hole, and we're working on a follow-up drill program at the moment. We have a very large team, very different from other explorers. Most explorers see people as a cost that needs to be managed. Ours are revenue generators applied to working with some of the top clients in the world, acquiring information. So we have a few people that I'd just call out. I mean, Alf Ego, he wrote his first paper in machine learning exploration in 1981 when he was head of CRA research. Then he was the first to say that AI/ML is not new. The approaches and the computing capacity are just different to be able to unlock this capability. Des Fitzgerald, leader in geophysics, world regarded. His company, which we acquired, is the data delivery service for many of the geological surveys of Australia. And he's been pioneering many of the geophysical techniques that we do today. Dr. Dane Burkhardt, brilliant young geochemist, heavily associated with developing the handheld XRF for geochem analysis in the field. So we have brilliant people working on the big problems that are going to be able to make discoveries for the future. We've grown really quickly. SensOre was only founded at the end of 2019. We grew it during COVID. We listed in February. We made our first acquisition there. We think there's some great mining technology in Australia that we want to be buying and being able to use our data cube with. So investing in SensOre, we are at the forefront of mining technology. We are a technology company. We're not an explorer. We do give people the opportunity to benefit from exposure to discovery through our joint ventures and equity components. I'm out of time, but look forward to answering any questions. Thank you.
Thank you very much. archTIS Ltd is a global provider of innovative software solutions for the secure collaboration of sensitive information. CEO and Managing Director Daniel Lai leverages his extensive industry experience implementing organizational change to address the information security challenges confronting government and businesses. Over his career, he's successfully led IT initiatives, including the Security Enterprise Architecture for the Single Information Environment for the Department of Defense, spearheading enterprise change, and as National Manager for Service Delivery for the Australian Customs and Border Protection Service. Over to you, Daniel.
Thank you very much. Ladies and gentlemen, thank you very much for having me. It's actually great to be in front of an audience again, instead of this little webinar screen that we're so used to using over the last 2 years. But what an impact that pandemic has had, not only on all of our lives, but on the tech industry itself. archTIS. archTIS stands for Architected Trusted Information Sharing. And our goal is to be trusted to safeguard the world's most sensitive information. It's not an ambition, it's what we do today. And by the end of this presentation, I think you'll understand why that's so important. A little bit about myself. My background was at first the wine industry, wine distribution and marketing. And then I went into the music industry. And of course, the music industry was one of those industries that was first disrupted by the internet with peer-to-peer file sharing, moving traditional industries onto the internet, of course, e-commerce and all the rest of it, which is where I got an interest in ICT security and e-commerce security. I had a child and decided I better get a real job and moved into intellectual property advisory services for the Howard government. I was head of copyright industries, did the Digital Agenda Act and a few other parallel interpretation laws. I brought Aldi into Australia to help break up that monopoly with Coles and Woolworths. But really my passion was ICT security, and I was the inaugural director of ICT security for the Australian Customs Service. So that's where we all started. archTIS was founded to solve trusted information sharing challenges between our allies in the Australian Department of Defence. Disclaimer, a little bit about who we are and why us. I think first and foremost, you invest in people and a fantastic team, and that's certainly what we do at archTIS. You know a little bit about myself. Kurt Muffelman joined the company when we merged with a company overseas called Nuclear Cyber, and they do something very similar, and that got us a foothold into the US marketplace. Kylie Sheether, who's our CFO, came from Tech1, again, a strong technical background. On the board, we have Miles Jakeman from the Citadel Group, and you probably know that they did a very successful exit a couple of years ago and was very successful in government and enterprise. We also have Leanne Graham, who was the sales strategist globally for Xero Software. So a very strong team. Why us and why now? Well, we are a proven team. We've done this before, and we've done major exits, M&As and other opportunities, and we've got deep subject matter expertise in cybersecurity. But not only that, have a look at the quality as we go through this presentation of our marquee customers and the validation and alliances that we have for such a small company, and you'll start to see why it's such an exciting opportunity. Validated an award-winning company with military-grade products. Our products are certified up to top secret and above. Up to top secret and above for not only Australian sensitive information and classified information, but US. We supported the operations in Afghanistan, Iraq, and we're still doing that today in Australia. For all of our Australian troops that get deployed, we control the access to the data between the 5 IS nations, New Zealand, Australia, Canada, and also Australia. Now, when we look at that, think about what's happening now in the world and the Quad. So Japan, India, Australia, and the US. Think about AUKUS. Think about all of how we need to move information securely under these current challenging conditions. We just recently won the Australian Defence Industry Cybersecurity Business of the Year, and we have previously won the Defence Excellence in Security Award from the Department Secretary. So credentials out the wazoo, that's not the problem. Right market, right time. Why now? If anyone hasn't heard of Optus or Medibank or isn't concerned about the privacy of their data right now, you need to be. You need to be. I can tell you, I've seen technologies that I could bring into this room and have all of your phones scanned and have your details already. So security is a big issue. Why is it a big issue? We are spending $1.8 trillion on digital transformation across the supply chain and every industry today. 2022 into 2003, 1.8 trillion. If you can't secure it, you can't trust it. The whole economy is based upon one word, trust. The digital economy, more so than others. Defense spending, 2.1 trillion this year and rising. If no one thinks that we are in an arms race, they're sadly mistaken. Right? That's the impact of the rise of China, the war in Ukraine, alliances out there being formed and reshaped. So on that, there's 1.75 trillion being spent in the next 2 years just on cybersecurity. So we understand the tensions. What we do in that market is data-centric security, and it's all about protecting the data, and we provide the access controls to the data, not the network, not anything else, to the data layer itself, and it moves with that data wherever that data goes. A little bit about the company. Everyone loves numbers. I remember my first capital raise for the IPO, and someone said to me, "Don't talk to me, tell me all the numbers. I don't care what you do. I'll find out about what you do after I hear the numbers." So I'm going to go through these numbers, but actually, to Ben's point this morning, it is actually about the company. But so a little bit about the numbers, 4.6 in revenue last year. We IPO'd in 2018 to commercialize a product. We launched it in 2019, and we have built up a global infrastructure since then, and we're starting to see that inflection in the momentum, and the numbers will start to demonstrate that. Difficult times, pandemic, we did drop a little bit in our services revenue. Can't provide services if everyone's closed for business because of the pandemic. But what happened last year, which was really interesting for us, was our annual recurring revenue grew substantially. Our licensing revenue grew substantially. Our gross margins were up at around 70%. And of course, our operating costs have been stable across the last 4 quarters. We finished the year strongly with 6.2 million in the bank. We've got about 5.8 there now. We've hovered around, opened the year at around about 14, 15 cents. Funnily enough, we've stayed there, which isn't being bad given the economic conditions. Just for those people who have got bad eyesight like me, here's a bigger version of it so you can actually see it. Strong cash position of 6.5 million. That was at the end of the financial year, 126% increase in licensing revenue on the previous year, 70% annual recurring revenue increase. We've got a very strong outlook for the year. Finished the quarter, you can see there licensing revenue up in the previous quarter, 690 to 490, a 41% increase. Services revenues was down, as I said, because of the closure with the pandemic. Since then, we've just closed a deal for $400,000 in services with the Australian Department of Health, and we've just closed another 260,000 with the Australian Department of Defence for 6 weeks worth of work. What I'm really happy about though is the repeatable growth in the ARR and the licensing revenue driving up. Again, our net cash operating, we've driven that down 80%. So we have got a line of sight to cash positive. So that's been very pleasing with the efficiencies that we've driven out of the business. All of that means that we've got an extremely strong outlook for this year. We had forecasted a minimum of a 60% year-on-year revenue growth. And that was on the back of a couple of deals that we've done, not only in Australia, but in the Australian Department of Defence alone, we did a $7 million deal at the end of June this financial year, and a lot of that revenue will come through. We have line of sight for 9.5 million in cash receipts. And that's on the basis of recurring revenue, licenses, R&D returns, and also services revenue. Core gross margins will stay at about 70%. So that's the numbers. As I mentioned before, Optus, Medibank, Lenovo, Microsoft, this is all going to continue into the future. 2 out of 3 attacks are either through negligence or an insider threat. The Medibank one was actually stolen credentials. Those credentials allowed somebody to go in and imitate a person. So how do we go about stopping this? And how do we fix this? Because the world has changed dramatically. One of the things that the pandemic did was take everybody outside the enterprise. Traditional controls, network security controls, are fantastic when you're inside the organization. But when you start to talk about hybrid cloud, moving outside, or if you want to use that data for other analytical purposes and add value and enrich that data, you're starting to move all of that information around. We now do work from cafes. We do work from home. We use an iPad. We use a desktop. We use a laptop. We do all of these sorts of different things, and that data is constantly moving. So the traditional controls are no longer valid. The bad guys are inside, whether you like it or not. You probably just don't know it yet. Innovation. Our number one client is the Australian Department of Defence, cutting edge innovation to solve information challenges and sharing of that information. We did the security architecture for the whole of the Australian Department of Defence. So government defence, obstacles to entry, security clearances required, etc. So a very key client for innovating and then spreading that information. Our secondary client there is the Defence Industrial Base. Why? There's $275 billion being spent on the Australian Department of Defence capability uplift in the next 10 years, and that will increase. Out of that $275 billion, 60% of all of that needs to be spent in Australia under the Australian Industry Capability Policy, which means our manufacturing industries get reinvigorated to supply for submarines, frigates, aircraft, etc. But they all need to be compliant. And what we're about is providing shared services platform with our controls and make sure that they're compliant to actually participate in that. They're also spending $15 billion alone on information cyber security. And we intend to take a large share of that and be a trusted partner of that. We also have key channel partnerships. We've got a coastal arrangement with Microsoft and Thales and Raytheon, and they are also clients of ours. We have two products. One is a self-servicing platform. It shares information. You just log onto it through a web browser, two-factor authentication, and instantly we can put terms and conditions of how we use that information, whether you can download it, whether you can print it, how long you can have access for it, if you can even see it, even though you're working with other people in that compartment. We also have a product called NC Protect, which allows our phone-grade access controls to be provided to the entire Microsoft Business application suite, whether that's in the cloud or on premise. Prior to the pandemic, 65 million daily users of Teams. Post-pandemic, 150 million daily users of Teams. It's a big market. What we do that's so special, this is our special sauce. Why us? Why now? We extend zero trust to the data layer. Now, zero trust is an architecture that's been coming. It was adopted by Joe Biden and forced across the entire US administration and had to be adopted within 60 days of him coming in as president. The US Department of Defense on the 3rd of November announced that they're going down this path as well and expanding this to solve the cybersecurity issue. What does it mean? It means validate everything. Do not trust anything. Every time there is a request for access to data, you need to validate who you are, what device you're coming on, whether the network is trusted or to what level the network is trusted, and then you put a policy around a piece of data to say whether or not you can access that. Why is that important? Well, it gives you contextualized access to information. If I go down to the coffee lounge and I log on, I can't see certain information. If I go into the building where I work and do a trusted network, I see all the information. If I get on a plane and I land in Hong Kong, I can't see any of the information. I then walk into the office in London and log on again, and I might see all the international information, but not the Australian information. Contextualized access means it's real-time dynamic risk access for your information. There's only a handful of companies in the world which do this, and we've been doing it since 2006 as a consulting company and commercialized that intellectual property in 2018 and are trusted with the Department of Defense. I've only got a couple of minutes left, so I'm going to whip through this. We not only use defense for revenue, and we've sold $13 million worth of licenses to them recently, $7 million award for our cogency platform at the highest levels of classification. 3 million of that is in licensing. 4 million of that is to have it integrated to their classified system. So that's not going anywhere, and we expect that to grow. But that's really the key. We had to lock everything down so very few users could access the content and inhibit our ability to share that information, and that's what we solve. Our clients globally, Corning. If you use smart glass on your phone, they own the intellectual property of that smart glass. We protect that. King Abdullah Center for Atomic Research and Energy, we protect the nuclear power plant plans for the whole of Saudi Arabia. So we have some big clients. SAP globally use our platforms to share information with departments of defence in Canada, UK, and Australia. These are our revenue streams. We are looking at global defence agencies, defence industrials, major Microsoft co-sell arrangement where they promote and sell us. And of course, we have targeted accounts up there, which we also take on for sensitive intellectual property. So why us? Why now? We're specialists in cybersecurity. We don't provide managed services. It's all about predictable annual recurring revenue and licenses at high gross margins of 70%. It's in the right time at the right place. But not only that, we have the credentials and the expertise in a growing market. And that repeatable growth is going to start on that inflection point. And you're seeing momentum with us in terms of triple-digit growth over the next 12 to 18 months. So that's really our projection. That's where we see ourselves growing. And thank you very much for the opportunity.
Daniel, as a footnote to your presentation, news just in, Medibank CEO says they will not pay any ransom over a data theft that saw 9.7 million current and former customers' data stolen.
Yeah, and this is only going to get worse. We're seeing compliance regulation come through in every aspect, and particularly for ASX and personal information.
Great, thanks, Daniel. K2fly's resource governance solutions are trusted by the world's leading mining companies in 62 countries. CEO Nick Pollock has over 25 years' experience in enterprise software businesses and professional services with global APAC and regional senior leadership roles. Now leading K2fly, a global provider of resource governance solutions to assist intensive industries. Nick is responsible for driving the commercial interests of the business, which has experienced substantial global growth over the past 2 years. Over to you, Nick.
Thank you, and thank you, Daniel. It's a tough act to follow when you talk about burning platforms and cybersecurity, which is so present in everybody's minds at the moment. I think K2fly fits very much into that category. Last week, I was in Sydney at the IMARC mining conference, which is Australia's biggest mining conference. It's not just an Australian conference, it's a global conference. And not surprisingly to most of you, the subject and topic of ESG is one of the most dominating sort of topics of the whole conference. A theme ran throughout it. And also increasingly the notion, as the conversation emerges and evolves, the notion of disclosures and regulation of disclosures by various companies, not just in mining, but across the board, and anti sort of greenwashing legislation that's coming on. So that's really front and center for where we're at in terms of that burning platform. If you think about news in the last couple of years, you would have seen lots of headline news in and around precious cultural heritage being destroyed in the Pilbara of Western Australia. We work directly in that. I hasten to add after the fact. Ground disturbance, tailings disasters in Brazil, with tragic loss of life. We work directly in those instances in order to make the mining companies more transparent and more accountable. So we're not anti-mining. We're not a mining company. We are an enterprise software business. We provide software to our customers, and we are creating this space called resource governance. So we are a very, very purpose-driven organisation. A lot of the people inside our business, including myself, have worked in mining for many, many years, but also love the industry, realise how important it is in order for the world to transition to a more sustainable footprint, and energy transition is critical. I think most of you probably know that already. I'm not going to lecture you on that. So our job is to help those organisations do better on the ground, and then also be able to talk about it to their stakeholders, shareholders, etc., and prove it with valid, auditable, governed information that they disclose. I was going to give you a quick video on how that works.
Mining and asset-intensive industries are constantly evolving, with increased stakeholder expectation, transparency, and ethical investing. New legislation and compliance requirements, sustainability reporting demands, and ESG rating. And technological advancements. This has caused a fundamental change in value creation and an increased risk of reputational and value destruction. From traditional valuation around commodity price and reported mineral inventories to the stock market, to increased scrutiny on the evaluation of ESG governance and risks. This has challenged the operators to find the balance between contemporary corporate social responsibility with local decision-making in a traditional federated mining model. Which is why we have created this balance through one centrally governed cloud solution across natural resource governance with community and heritage, land access and monitoring, ground disturbance, dams and tailings, and rehabilitation and closure, mineral resource governance with resource inventory and reconciliation, and block model management and governance, and technical assurance with automated ore blocking and mine geology data management. And why we are trusted by the world's biggest miners and asset-intensive companies to deliver and operationalize environmental, social, and governance outcomes and value creation through improved.
Oh, I think we'll move on then. So in terms of a quick business snapshot, I think there's a couple of things that characterize our business. The solutions, the 9 solutions we have are down the bottom there. It's a business that in less than 4 years is characterized largely by the size and global nature of our clients. So from a lot of people say perhaps the mining, the resource industry that we're focused on is not big enough. But when we look at the available spend within those top 500 miners, it's huge, and this problem is massive. And they need to crack on, as I'm sure you are all aware. So, we are characterized by the quality of those businesses. And quite frankly, a lot of people in the industry are quite amazed at how quickly we've been able to sign up and contract repeatedly with those businesses. Rio Tinto, for instance, now use 5 of our solutions and are, not surprisingly, our biggest customer. The other thing is that this is not just an Australian thing. So 40% of our revenues are coming out from outside of Australia, which again speaks to the global nature of the business. 20% out of the Americas and 20% out of Europe, Middle East and Africa. And we also have other asset-intensive clients, particularly in utilities, which is a strong part of our background. A lot of what we do is corporate in nature. Having been in the software business for a long time, it's all well and good to win one site. Winning the rest is pretty darn hard. If you sell to corporate for a corporate risk issue that the board care about and the CEO care about, and you've seen the implications of getting it wrong at Rio Tinto and other businesses, then that tends to speed things up a little bit. And when it comes to disclosures and materiality, you have to disclose everything that's material. So we get all of the sites for some of these solutions, not all of them, I should hasten to add, but that puts us in corporate, puts us in a really, really strong position to land and expand. A lot of this stuff is publicly available, and in the short space, I don't want to spend too much time on it. But what I will say in this instance is recurring revenues, ARR is currently sitting at 6.5 at the end of Q1. Last year that grew at I think 78%, and our total contract value grew to 19 odd million last year, which was an 80% growth. So strong growth business, which is attracting a great deal of interest from institutional shareholders. So the stock is tightly held across close to 70%. So Wesfarmers, Tribeca, First Sentier and Regal funds have a big chunk of the business. And then obviously executive and management. And then in the at the beginning of this fiscal year, we brought on Maptech. And this is really interesting because Maptech is the world's biggest privately owned mining software business. Came out of South Australia originally. Revenues of over in excess of 120 million per annum, still private. But what it shows is the endorsement from, they've been around for 40 years of a really seasoned mining software business that aren't in the ASX, recognizing the values of what K2fly can deliver to the industry, realizing, as one does in a very pragmatic way, it's going to take a long time to be able to build this stuff and bring it to market, but wanting to be involved in that. So that's a massive endorsement for our business, and we brought Peter Johnson onto the board as well, who's the chair of MapTech. Pauline Vamos has just joined the board. She's out of Sydney. Pauline has ex-ASIC regulator. She's head of governance Australia. We're promoting something called resource governance. So that's a very nice fit. Also with her ASIC background. And Pauline actually has a history in working in the ESG businesses as well. So she's a really strong professional chair and NED, but also with a lot of aligned interest in the areas that we play in. As I said, I've been in the business in the enterprise software business my whole career, 25 years, been in mining 15, got on this sustainability journey about 10 years ago, especially resource governance. I started 10 years ago, before it was K2fly, and then have done 2 postgrads in that since then. So if you look at what the risks are for the industry, these won't come as much surprise, and the ones that are indicating little K2flies next to them are where we play, either directly or indirectly. And this is, 3 of the big 4, if you like, EY and KPMG and Deloitte. There's surveys of CEOs and boards and what keeps those CEOs awake at night and what they worry about. And there's a couple of things, in terms of where we specifically play. Clearly, we play in the environmental social governance area, in the KPMG area. Community relations and social license to operate is key to just about everything that we do. The trust that these mining companies have to have in order to keep growing and expanding and being able to explore and develop new properties without that license to operate, which is hard won, takes a long time to win that license to operate. That trust easily lost, and I think we've seen lots of examples of that historically in terms of some of the failures of governance. Embedding ESG into organisations, and the Deloitte things you would have heard in the video, we operationalise this stuff. So on one hand, we're replacing old software that needs to be updated and off the shelf. At the same time as that, the icing on the cake for the board and the executive is that we're driving good data, which can be disclosed to the market, that's readily auditable and can be disclosed. So really, really important thing there. We could talk about each of those subjects for a long time, but we don't have the time. So how do we address that challenge? So if you look across from left to right there, the pictures indicate not all of our solutions, but some of our solutions. Underneath that, we have all of the things that are affecting the industry, from stock exchanges, regulation, investor expectations, as you guys will well know. But on the left-hand side there, we have the resource disclosure solution. So for those of you that invest in ASX listed mining companies, you would have heard of JORC. So our software manages the roll-up and disclosure to the software market, or to the regulator, to the ASX and shareholders of the mineral resources and reserves. So essentially, what is tons grade times prevailing price of the day often constitutes the value of a business in a traditional sense. If you link that together with land access, and if you're looking at a junior miner, those 2 things are critical, in terms of the assessments that you would make. First of all, do they have access to the land? Do they have a tenement? Simple. Do they have a traditional owner agreement? Getting more complicated and longer. Do they have the community support? More complicated, longer. Do they have all the permits in place? That's the sort of stuff that we manage in the background, which is often not taken enough care of, but is becoming really, really important. You put that together with the quality of the resource, you have a junior miner. That essentially is a very traditional way of looking at the value of these organisations, access and resource. Increasingly, you can either increase the value of that organisation by doing a much better job on the way that you conduct yourself on those communities, with those communities, and how you disclose that to the market, whether that be heritage, touched on that earlier on. We now do heritage and ground disturbance for Rio Tinto and BHP in the Pilbara of Western Australia. Tailings, we've seen there's lots of presentations, all good stuff in and around how you monitor via drones, LiDAR, lots of great technology out there about how you monitor a tailings dam so that it doesn't fail and kill people. But what you do with that information is really critical. Okay, that's a really important point. So that I'm not denigrating those things at all. They're really necessarily really important. What we do is we pull it all together, manage the data, and make it fit for disclosure. And also there's a line of sight between what's disclosed and the operator, so that you have that transparency as an investor. Obviously, mining rehab is critical as well. So that's in the video. I won't spend too much time on that. I've only got a couple of minutes left, but we covered those. So in terms of what makes it critical to our clients, protecting and maintaining that social license to operate, we are replacing old, outdated software with off-the-shelf software, which is a key thing that we're doing with these majors right now. So it's extremely sticky. Having been in this industry for a long time, it's 10 to 20 year stuff. So that's what's driving our revenue growth, if you like. Good contracts, which you can look up, strong growth in ARR and TCV, a new solution coming out this year, which will basically drive the scalability and rapid implementation of more and more clients on top of the ones we have in terms of our land and expand strategy. So that's a really important announcement. And for instance, there's this sort of Imerys contract, which is a big industrial minerals company. If you think about the Australian equivalent of a Luca, that's tiny compared to Imerys, is one of the biggest in the world. 200 sites globally, starting to roll out our access system across the globe. The first deal here is for the first 15 sites. We've got a long tail there. So that's very typical of the deals that we work in. Again, managing ESG risk at a corporate level where they want to be able to control that. You can see a really strong track record of growth in the ARR there, which we see continuing. So that's, I'm really, really proud of that sort of nice straight line of growth there. The TCV goes up and down depending on how much we've delivered, because it comes off each month as well as we deliver stuff. But that's headed in the right direction. It gets lumpy. And the other thing, finally, that we're really proud of is our net retention rate of last year, 125%, this year, 126%. What that effectively means is if we don't land one new client this year, we'll get an additional 26% of revenue out of our existing base. So that's, and as that base grows, that grows as well. So you have this underlying sort of momentum going in the business. The other thing that we was receiving a lot of questions about, well, if this is so valuable, why aren't you charging for it? So you could see last year our average software license price jumped 5-fold to nearly $350,000. That's just license. That doesn't include the implementation or anything. That's just the license per annum. So that's a massive jump up. So you can start to see that those big organizations are clearly valuing what we do. I think I'm out of time, so I'm just going to basically quickly finish with some really important points from an investment perspective. Growth, continued growth. Yes, there is economic headwinds out there, but I think we all know in terms of this energy transition, mining is a really, really key part of that. So that's going to keep going. ESG is not going to go away. It is part of the business now. You cannot value a mining company anymore without taking those things into consideration. Really sticky revenue with very major clients over a long period of time and huge opportunities for growth in the future. So I'll be available today if anybody wants to ask questions. Thank you very much for giving up your time and coming to listen to the story. Really appreciate it.
Thank you, Nick. Yojee is a cloud-based software as a service logistics platform that facilitates the flow of freight movements into a single ecosystem, making the complex process of managing land transport simple and reducing carbon emissions for a greener planet. Co-founder and managing director Edward Clark has over a decade of fast growth upstart experience across Asia and Silicon Valley, with successful Asia-Pacific based startups taking innovative blue ocean technology platforms to market in areas such as real-time communication, big data marketing, and e-commerce. Edward, over to you.
Thank you. Thank you, everyone, for having me in. It's good to be in front of so many people in real life. I think the last 3 years have been presenting in shorts and a suit jacket on Zoom. So very good to be here in Melbourne. I'm based in Singapore. And as mentioned, Yojee is a cloud-based logistics platform, and I'll get into where we fit in the ecosystem. I think a frame of reference that a lot of people have here today is WiseTech. A question we often get asked is, how do we compare? So I'll address a lot of these things. When I started Yojee, I've been working in the e-commerce space, and in Southeast Asia or in Asia Pacific, it's about half the world's supply chains are working there, whether manufacturing or whether in the e-commerce boom, there's huge growth.
the reason I started the business was because we were looking at the problems in end-to-end supply chains, which has been highlighted by COVID, and how freight moves across borders and across land has been very, very complex. It's been a black box for a long time. And I think a lot of you will know that even a simple freight parcel delivery to your front door is still not done that well. And there's a big technology gap in how that happens and what happens in between when you receive it at your front door and what happens with trucks, containers, pallets as it moves across the supply chain. So we had a big audacious goal of connecting Asia Pacific's supply chains, which after 6 years, we're making significant impact on. Our vision is to make Asia Pacific's road transport the most efficient in the world. And I'm going to talk about how we're doing that. So on a page, the highlight of our business, we've grown 100% organically over the last 3 years. We are a business that's got a lot of defendability in what we do, because we're not just selling a commoditized software to single transport companies. What we've actually done over the last couple of years is connect up hundreds of transport companies to the freight forwarders who are working together to create these freight networks to enable them to deliver across Asia Pacific, which is very greenfield in terms of technology and technology adoption in supply chain. And to do that efficiently, reliably, and also to start to understand the CO2 emissions, the ESG side, which is becoming very important in supply chains as brands start to ask their forwarders and their transport companies to help them report on their CO2 emissions. So I've used this slide because it really helps people understand what a supply chain looks like. In its simplest form, it looks like this, where on either side of this section in the middle, which is the cross-border ERP side of things, is a big black box that hasn't been connected before. So when it starts at a single piece item and from manufacturing, moves into boxes, moves onto pallets, moves on containers, goes across border, goes into shipping or air freight, and then out the other side. What's really interesting about this is the technology that we see in the industry that's most heavily adopted is in the cross-border space. So you'll see here SAP, Oracle, and CargoWise, which is the product by WiseTech. This is all in the enterprise administration of cross-border freight movements. It's not in the execution of supply chain activities. And so Yojee takes a view that differing from these large enterprise players, you need to be able to connect up what you're doing in the Oracle, the SAP, or the CargoWise system and provide visibility end to end on that, which is the demand of the brands across the world. So what we do through a single API integration is allow our customers who are freight forwarders. We have the world's biggest shipper. We have one of the world's biggest freight forwarders. We have 4 or 5 of the top 10 global supply chain companies on our platform. We enable them to connect to the networks, which is what is here on either side of the cross-border section, and say, right, now we can go from having visibility when it's on the ship and doing the administration of cross-border movements to plugging this in, and now we can see end-to-end through all of the transport. And if you look at the TAM of this sector, the TAM of land transport is somewhere between 4 or 5 times the value of the cross-border section of a freight movement. So we're going into a much larger market, which is still, as I said, greenfield. It's not very well connected. We do this right now in over 8 languages. We can roll out a language very quickly. Our platform is very modular, and we've been doing deployments to send countries live in as low as 2 weeks. And as I mentioned before, we've got a very large adoption of transporters who connect this whole thing up. So touching on COVID, why is this important? What's happened through COVID is that supply chains have gone from just in time, which was moving stock from the manufacturer pretty much to the store at the other end of the world, just in time for it to sell, to what they now call just in case, which has put huge stresses on supply chain. I think the toilet paper issue in Australia was a very good highlight of what happens when you don't have stock close to your customers. How this then breaks down is that freight forwarders are asking transporters to move freight from more places closer to customer, which means more warehouses, more dispatch centers, and more fragmentation across Australia. And brands are having to move freight earlier. So they're putting more stress on warehousing, more stress on transport providers to move things further and faster. And also consumers during the COVID period said, we want to have visibility on our goods coming to our door, things like Uber Eats and last mile delivery, really improved its consumer experience during the COVID pandemic lockdown period. But that's now been pushed onto the supply chain, which didn't have to be so accountable for that in the past. So now brands are going and saying, if you're moving $1 billion of freight through your supply chain, we want to know where it is in real time, all the time. And so that's making freight forwarders and freight movers much more accountable now to adopting legacy technology. And so what does that look like in our region? Our region is $400 billion in third-party logistics revenue. That's just the third-party logistics. If you look at the transport sector, the trucking, you're looking at another almost $1,000 billion in revenue across Asia Pacific. So it's a very large problem. And what's happened in the past where people are not adopting technology is they lose visibility. As a brand, you don't know where your freight is. You don't know how to prepare resources at your stores and your warehouses to unload. You don't have control over what's happening, and you become quite inefficient. You don't have ability to plan. And so Yojee solves a lot of these problems through our technology, which helps our customers plan, track. We use tools, AI type tools, to execute on route plans so you can see schedules. So every bit of freight that's moving through the Yojee platform has an ETA to the minute of when it's going to arrive, which can be shared with your customers. So whether that's consumer last mile, whether that's container to a depot or pallets to a store, everyone has real-time visibility. And what we in fact see with our global freight forwarders is they'll set up a control tower in their office and they'll have 2 screens where they can see their fleet in real time, and they'll have their dashboard of their metrics. How are they going for the day? Is there any freight at risk? And these types of things. So what we do at Yojee is connect all of the stakeholders across supply chain to the cross-border movement. So you've got the shipper, the forwarder, the transport partner, and the recipient. So this is a very, very big platform technology. It's taken a number of years to get right. As I said, we're in the 6th year now. Over the last 2 or 3 years, we've onboarded 4 or 5 of the world's largest transport providers, which have a total revenue of about $150 billion. And what we've done for them is help them connect their whole supply chain with visibility end to end. And that has some very significant impacts on their operations. The first of all, as the CFO, you can go from 90 days plus of time to cash to inside 30 days, because once you've digitized that end-to-end process, you're not relying on subcontractors and transport partners to execute on their piece of the billing, to reconcile everything and then provide a proof of delivery to the brand. We pull the whole network into a real-time system, which then feeds ERPs for billing. So it brings you closer to cash. It means your cost to serve from customer service perspective comes down. It means that your customer net promoter score goes up. And what's really important right now is that we see brand freight forwarders, these groups that are working on that land side, are realizing that over the first 2 years of the pandemic, it was just whoever had capacity got work. Now capacity is easing off and the customer expectation is becoming higher. And so they're realizing that whoever adopts and provides the best visibility and reliability to their customers will keep the customers and win more customers. So it's kind of an arms race at this point to provide visibility and reliability to your customers. So in a nutshell, what this looks like, we've now rolled out across 8 countries. And the defendable, the big moat that everyone looks for in technology is why can't someone else go and do this? What we've done now is connected hundreds of transport partners to our system, which is then offered to the freight forwarders. So the freight forwarders have access to hundreds of trucking companies that have gone from being a black box that work with no visibility, no technology, to a fully visible network, which they can then manage during the day and at the end of month. Who's on time, who's performing, and who shouldn't we work with? So this visibility is a huge benefit to the freight forwarder, but it's also very difficult for other competitors to come in and de-seed us from our position, because these types of integrated connected partners used to be an IT team working for 3 or 4 months to do an API or EDI integration into an old system and try and pull back some type of milestone. We can now basically, with the equivalent of a phone number, connect you to a partner in under 30 seconds, and then you can get real-time visibility of your freight. So it's one thing to build the platform, it's another thing to build this network infrastructure that we've put together. And you can see in this diagram the volume of partners coming on. Every freight forwarder that comes onto our platform brings in a whole range of partners with capabilities, which was traditionally unmapped and with no technology across Asia Pacific. It adds to our capability, it adds to our service offering, and improves everyone's experience. In today's presentation, we've released it to market. We've done a bit of a map of our business's journey over time and how our expenditure has led to revenue. And we've also mapped out what we see going forward. And over the last couple of years, we've spent a lot of time focused on how we build our product to make it just right for enterprises. In financial year 20 and 21, it was taking us about 6 months to deploy to a new enterprise. Today, it takes us about 2 weeks. So we've really gone from being a new upcoming technology now to a very ready to play platform technology. So our spend in the whole deployment customization is gone. We're a single platform experience. And now as we go to market, as I said, the last 3 years as we've been turning that from a product focused company and starting to roll out our product with large enterprise customers and the transport partners, we've gone from a product that needs a little bit of work to an instantaneous deployment now with hundreds of connected partners. So much easier for us to deploy. And now our focus goes from platform build to revenue build, which is the next 2 or 3 years of our journey. So we've had a very significant change in how we go to market because we're much more focused now on the next 100 enterprises as opposed to how do we make the first 5 enterprises really happy. The first 5 enterprises are all still on the platform and doing well. So the next thing is we want to make that repeatable. We've got a product that is repeatable, that we don't have to customize, that's got the network players on the platform. And that's really what everyone wants. If you're trying to figure out how to do last mile delivery in Malaysia, first mile in Vietnam, trucking in Indonesia, it's a very risky business for a forwarder to go and find transport partners to work with. But on this platform, we've got qualified, vetted and data-backed companies that can work with you and give you the visibility that you need to grow a very significant brand and an asset-light brand. One of our customers, Maersk, recently announced that they see their transport side of their business being much larger than their shipping side of their business in about 5 years' time. So Maersk is the largest shipping company in the world and they move 25% of containers. And the reason for that is that the revenue on the value-added services of land transport is about $8 to every $1 of containerized revenue. And so this is a really exciting thing for us that we're now focusing on capturing everyone's requirements to beat the lack of visibility across supply chains across Australia and Asia Pacific and provide that visibility across the board. Our team here, it's a very, very strong team. Recently joining our company, Mark Connell, who was the head of product at CargoWise WiseTech. We happened to meet, he had a very similar vision of ours of taking what is done from an administration perspective and putting it across the supply chain in terms of a visibility and execution platform. Darren Pelfrey, who's here today and will be at the booth, has come from Li & Fung and Galaxy Supply Chain, which is a visibility platform. And recently Saskia Groningen-Wood, who was the CEO of Damco, which was one of the top 5 freight forwarders in the world, which was owned by Maersk. She's come onto our board to help us out with the next phase of our journey as well. So very good technology. The way we build is on every movement our customer makes. We charge a transactional fee, which is in our investor presentation. Very simple model. Our customers know how to on-bill that to their customers, and their charge is for visibility, which their customers are very happy to pay. So there's no tension between our customer and what they're paying with us. So the next phase for us, as I said, 100 new customers, working through that process, going to market with a very strong team and capturing all of the value in supply chain in Asia Pacific. So thank you everyone for joining today. We've got a booth outside and we'll be around. Thank you so much.
ABx Group is committed to creating new supplies of strategic minerals and chemicals by identifying and exploiting niche deposits and developing novel chemical engineering processes. Here to tell us more is Managing Director and CEO, Dr. Mark Cooksey. Welcome along, Mark.
Hey, thank you. Australia relies on the import of several strategic minerals and chemicals, and our economy would suffer enormously if those supplies were cut off for any reason. So I'm Mark Cooksey. I've got 25 years experience in innovation in process development, initially in Rio Tinto, then CSIRO, and now ABx Group for the last 2 years. And if there's one thing I want you to take away today, it's that ABx Group is investing in a small number of really good opportunities for new suppliers of strategic minerals and chemicals. So that's just the standard disclaimer about some forward-looking statements I'm making today. And just a summary of our corporate situation. The thing I want to draw your attention to is share price just steadily appreciating this year. We're only $30 million market cap. We think we have a lot of upside, which I'll be talking about today. At the moment, ABx Group has three strategic areas of focus, three opportunities we're pursuing. First one of those is exploring for rare earth metals in Tasmania. Second one is a new process to produce aluminium fluoride. That's the one I'm going to be talking in detail about today. And the third one, more historical, is specialized bauxite exploration and production. But today I'm going to focus on the aluminium fluoride. So you probably haven't thought much about fluorine. Not many people would bother. Hydrogen fluoride is a very important chemical worldwide. It's got uses in itself. So it's used in electronics manufacture, graphite purification, so for making batteries. It's also needed to make fluoride chemicals like Teflon, and it's needed to make aluminium fluoride, which is used in aluminium smelting. And for these reasons, every major jurisdiction, USA, Japan, Europe, China, have all defined fluorspar, the source of hydrogen fluoride, as a critical mineral. So every major economy in the world, notably apart from Australia, has said, we need to make sure we can get fluorspar so that we can make hydrogen fluoride. And fluorspar comes from fluorite, that's the ore. It's actually one of the few ores we actually don't mine in Australia. And, a table of the Australian production of all those chemicals, zero, effectively. So we are totally absent from this supply chain, and it's required, not only is it required for specialized chemicals, but it's required to produce things like steel and aluminium. So it's a bit like, you might remember the AdBlue crisis a year or so ago with diesel, just a small additive to make diesel. It's a bit the same here. If you don't have fluorspar, you can't make steel. If you don't have aluminium, you can't make aluminium. Sorry, if you don't have aluminium fluoride, you can't make aluminium. So just drawing on aluminium fluoride in a bit more detail. So it's an essential chemical, as I said, for aluminium smelting. The global market's about $1.5 billion. And most of the world is self-sufficient. So China produces half the world's aluminium. It produces half the world's aluminium fluoride to supply itself. And likewise, there's an aluminium fluoride plant in Canada and a couple in Mexico to supply the US and one in the Middle East. But Australia, being still the 6th largest producer of aluminium metal in the world, is the largest aluminium producing region without its local own aluminium fluoride supply. So we have to import all of it. We always have for decades. And at the moment, we get most of it from China, around 80, 85%, and a little bit from elsewhere, Mexico or Norway, etc. So we've got a situation where we want to produce aluminium fluoride, but I've already said we don't have any fluorite, which is the ore. So what do? Well, coincidentally, the aluminium industry itself produces a waste that has a lot of fluorine in it. It's called tap bath. And it's interesting, it's actually a new waste. For a long time, it could be sold to other smelters in the world that were being constructed. That construction has now stopped. There's not many new smelters being built. So suddenly the global smelters are going, oh my God, we're spitting out this fluorine containing waste. What are we going to do with it? So here's the start of an opportunity. In Australia, we have a fluorine containing waste, and we want to make products that need fluorine. So what ABx Group has done is develop a process to take that waste and turn it into valuable fluorine products. So we've done that through a subsidiary we call Alcor. It's 83% owned by ABx Group. So we take the fluorine from that tap bath from the aluminium smelter, we convert it back into hydrogen fluoride and then aluminium fluoride and sell it back to the smelter. So it's a perfect example of a circular economy. We also, as part of it, we're also looking at making the aluminium part of the aluminium fluoride more efficiently as well, using another waste as the source of aluminium. And importantly, I guess for a potential investor, we basically have no competitors globally. So one, not many people have identified the opportunity. A few of the aluminium smelters are starting to realize, oh, we've got a problem with this waste, but no one's getting into it like us, into actually developing a solution. And the aluminium companies, whom I've known for years, basically call me and say, Mark, when is Alcor going to be up and running? Because we need you to take our waste and solve our problem. And just for the technically minded, if you're interested, just a bit more detail about the process. We take the smelter bath, which contains all this fluorine, also has sodium and aluminium in it. We add sulfuric acid to it, and that makes hydrogen fluoride and some other metal sulfate co-products. And then we take the hydrogen fluoride to make the aluminium fluoride. So that's very simple. Obviously, there's complexity with temperatures and amount of acid, etc., and concentrations, but that's the simple summary of the process. And so where we're up to is we've got a laboratory on the central coast of New South Wales where we've done extensive laboratory work to demonstrate that this process works, scientifically, like the chemistry. If you react those materials, as I said, you get the products that you think you're going to get. That work has now gone well enough that we're confident enough in the conditions to build a bigger one. You've got to scale in chemical engineering. You've got to scale up from lab gradually up to a commercial plant. So we're now designing what we call a pilot plant, which is going to consume 20 kilograms per hour of this bath waste and produce hydrogen fluoride. And so there's some pictures there of some of our lab and large lab facilities at our technology centre on the Central Coast. So scale up of chemical engineering process is pretty difficult, right? You want it to work in the lab, that's fine, but to go to full scale, you've got to really know what you're doing. And history is littered with people who try and go a bit too fast and it doesn't work. So we've got a very rigorous approach to scale up. And so the logic we're following is our laboratory work, quite small scale there on the left. Our analysis of the commercial opportunity is that the appropriate size for the largest appropriate size for a plant in Australia, which we plan to put at Bell Bay in Tasmania, near a existing aluminium smelter, is 20,000 tonnes of aluminium fluoride per year. So that would represent 80% of Australia's aluminium fluoride needs. It's only 2% of the global needs, so it's not trying to change the world. It's just saying that's our first plant in Australia. And I said a minute ago that our pilot plant will be about 20 kilograms per hour. So what you'd ideally want to do is go from that pilot plant straight to the commercial plant, but chemical engineering experience says that's too big a jump. It's a factor of 150 times, and that's too risky. So what we're planning to do is to have a small commercial plant. That's the third box on the screen, and that will be in Tasmania, big enough to be profitable on an operating basis. It's small, so the capital cost payback is a bit longer. But then importantly, we've got a grant, a $7.5 million grant from the federal government, from their Modern Manufacturing Initiative. We received that earlier this year. And that basically funds half the cost of that first smaller commercial plant. So the concept is we'll be doing our piloting work next year. We're designing it now, doing it next year, and then starting the design process of that first small commercial plant, get that up and running, and that will then demonstrate the process to build the larger commercial plant also in Tasmania. Equally, at the same time, we've got other aluminium producing regions in the world also really interested in the technology. So after that first small commercial plant here, we could be building our larger one here and also larger ones elsewhere in the world, such as Canada, a lot of aluminium smelters there, Middle East, etc. And we're not just limited to the aluminium fluoride as well. So, as I showed earlier, what we're producing is hydrogen fluoride, which has other applications such as fluorine chemicals. So Australia currently really doesn't have a fluorochemical industry. If we need any hydrogen fluoride, we have to import it. It's quite expensive. We need to import small quantities. What we're going to create here is a technology for producing larger quantities of hydrogen fluoride from a waste, therefore lower cost. So we can potentially be the catalyst for a fluorochemical industry in Australia. So that's just the summary of our story in time. So we started back in 2018 when we had the idea to produce aluminium fluoride. We've made really continual good laboratory progress, even through COVID. That was pretty challenging, trying to do work on the Central Coast of New South Wales when staff are locked down in different areas. And we've got a steady plan through, as I've described, through to piloting and then commercial plants. So really, the message is ABx Group is creating new suppliers of strategic minerals and chemicals for the benefit of Australia. We'd love for you to join us in developing these processes. So I'd like to thank you for listening, and together we can make Australia more resilient to supply chain disruptions. Thank you.
Thank you. Jamie Conyngham has a history of founding and growing high-tech companies. He has considerable international experience, having run startups in Europe in multiple countries, having been appointed as CEO of Bridge in December 2019 with the growth mandate. He's taken Bridge to a position of strength by raising capital for growth and providing the strategy for Bridge to become the zero of NDIS. Jamie Conyngham.
Thank you. Morning, everyone. I just want to explain what Bridge is. We're a software as a service company. We provide software for a group of companies called providers. We're like a CRM for them. So a provider is it's an organisation that provides like services on behalf of the federal government. So we started in 2008 with employment services providers, and now we're moving into NDIS providers. Basically, the opportunity is that providers have quite a lot of compliance they have to do for these government programs. So we're like the software that the staff use when they come into work. They log into Bridge, and they can do everything in Bridge. So it's sort of like, instead of having Excel spreadsheets and bits of paper and various other databases, they can just log into Bridge. They start using it. It's got all the participant information in there for NDIS and employment services. And we connect into the federal government as well. It's a massive opportunity. As I said before, we started off with employment services, which was a smaller market, but we're growing into NDIS, followed by aged care. And in terms of the scale, like there's about 150 employment services providers, and there's 17,000 or over 17,000 now NDIS providers. And then aged care is a huge market as well. So everyone knows like how much the government's spending on NDIS. Like it's already at 30 billion. It's forecast to go to 50 billion now, which is just massive, right? It's approaching like the defence budget of Australia. So it's a huge business opportunity, and for investors, like it's a good way to get investing in Bridge is like a good way to get exposure to that huge market from a technology perspective. Just a few highlights here. I just want to talk quickly about the company itself. Like we already have revenue. So versus other tech companies, a lot of them don't have revenue, and they're just sort of like promising to create the product and all that sort of stuff. But we've actually been around since 2008. So we've got some revenue. It's modest. It's 1.7 million. last financial year. But the good thing is that, you know, you're not like just saying, oh, we're going to be doing this, we're going to be doing that. We've already got some revenue. So we're really in scale up mode now rather than startup mode. I guess that's the difference between us and other, you know, tech startups you might see on the ASX. We're still a microcap. We've only been listed for a month. But yeah, we've got big plans of growing rapidly into NDIS. You know, we've got an experienced board behind us. It's myself, and we've got the ex-CEO of NDIS is now a board member. So we've got Martin Hoffman, we've got Rupert Taylor Price, we've got Leanne Graham, who helped scale Xero from like 100 users to you know, 10,000, sorry, 100 clients to 10,000 clients, which is fantastic as well. So the market problem basically is that it's quite a lot of compliance for these providers. So you can't just, if you're a provider and you do some work, you have to get your money back from the government, right? So I'm talking about an NDIS provider now, for example. That might sound easy, but it's not. So they have to go and log on to government websites, and they have to upload spreadsheets, and they have to do all this stuff. And it takes up a lot of administration time. So like a small provider who's trying to provide care to people, they might waste like, you know, a day a week on admin of just trying to get their money. So by using a product like Bridge, you know, we can make these processes easier for the provider. And by making it easier for a provider, what you're actually doing is you're making that provider more efficient. And when you make the provider more efficient, they've got more time to spend on caring for people. When they're spending more time caring for people, they're actually like able to make more revenue as well. And the beautiful thing about what we're trying to do with Bridge is if we can get to lots of different providers and make them efficient, then what that means is that we help make the whole of NDIS more efficient. And I'm sure you've all read like lots of articles about, you know, people complaining that the NDIS is inefficient, the whole process is inefficient. So this is how you can start from ground roots to try and make the whole of NDIS more efficient. And it's our money, it's like taxpayers' money, like going out. So, you know, it's within everyone's interest to make this more efficient. And all these providers, like I mentioned before, like there's 17,000 providers. A lot of them are just they don't have any systems at all yet. So you can imagine like that it's not that efficient at all, right? So like, you know, if they're looking up a participant's details, it might just be in a spreadsheet or something like that. So it is quite cumbersome. They don't have systems. There are a lot of them are like just like small. You know, you're talking like you know, 1 to 10 people in some of these providers, and so it's our goal to you know, make Bridge really easy to buy for these providers, and then really easy to use as well. And that's one of the key things that we're doing with the capital that we raised at IPO is you know, we just got to make it really easy to buy the product. And what that means is you go to the website, you put your credit card details in, and you can start using the software straight away. Same as other SaaS sort of software, you know, like your HubSpots and your Xeros and all this sort of thing. That's why we say that we're like the Xero for NDIS, because what we're talking about is letting a provider go onto the site, put the credit card details, start using it straight away. But then also when they start using it straight away, it's got to be intuitive. And so that takes like quite a bit of development, and that's stuff that we're working on now is like, how do we make it so that anyone can just open up the software and start using it? So it's got to pass the mother-in-law test is what we call it. So anyone off the street can just open up and they see like claim button, they hit the claim button. Guess what that does? It does a claim to the government. So it's got to be like that simple. Otherwise, you know, these small providers won't use it, and we'll get high churn. I'll skip through some of this stuff. A little bit more about the product itself. You know, it's a customer relationship product. So it does like all the participant details. It does all the documents to do with that participant. It does your like tasks that you've got to do during the day. And I said before, like it talks to the government systems to get all this information for you, so that you don't have to do all the manual typing and stuff like that, and you can get your money like quickly from the government, which is important. This is really important actually. So we're an accredited platform. And what that means is we've been through like massive security clearance in the employment services space to get to a level where we're able to handle private citizen data. And we think this is quite unique actually in the NDIS space because it's quite like a nascent space. So a lot of our competitors don't have this accreditation that we have from being in employment services. So we're fully accredited by DEWR, which is the department that looks after employment in the federal government. To get that accreditation, just to give you an idea, this might be a bit boring, but like we have to go through 800 different controls, like security controls, to get that accreditation from the government. So we're super secure. There was a hack recently in one of our competitors that wasn't as secure as us. So we take that super seriously. And of course, you've all heard about the other hacks that have gone on lately. Seems like everywhere at the moment, there's a lot that aren't being reported. So we take it super seriously. We're also like hosted on a cloud called Vault, which is like a defense sort of level cloud, which is different to our competitors again, who may be hosted on, AWS or Azure. And the difference there is that, with Microsoft and Amazon, the US companies, so they fall under US jurisdiction, whereas we're hosted with an Australian-owned company, Vault. So there's a big difference there in security because your data can end up under the jurisdiction of a foreign company versus a local company. So that's why we did that. So we think we've got a fantastic USP there as well. Graph on NDIS, as I said before, it's growing massively. Aged care also another $30 billion space. So what we're going to do is after we get more traction in NDIS, then we will start moving into aged care providers. And the beautiful thing about Bridge is that it's provider software. So it doesn't really matter what the provider is for. So the core features are the same. And it's that stuff that I was talking about before, like with, the document management, the task management, the user management, all that sort of thing. All the providers need the same sort of things. And then what we do is we just build features on top of that for each different government area. So it's quite interesting because what it means is potentially providers in different countries could use Bridge because they all have the same sort of problems. They all need to like keep client details and do task document management and all that sort of stuff. So there is an international opportunity there as well, but we're just strictly focusing on the Australian market at the moment. However, when we make it easy to use and buy, like in an e-commerce type way, you're basically opening your shop doors to the world then. And so what happens is people from other countries can just go and buy the software the same as anyone can buy the software in Australia. So that's going to be really interesting when we start that part of it, because we might find sales in different countries where we didn't expect to get sales from. Just a little bit about the business model, how we charge. So it's based on like the amount of participants a provider has. So for example, an NDIS provider might have 100 participants using Bridge, like they're looking after 100 participants. That could be like $3.33 a month per participant. Yeah. So the maths is simple. It'd just be 100 times $3.33 a month. And that's how we charge. And that's how we've always charged with employment services as well. Some of our providers in employment services, for example, have 20,000 participants on Bridge. So, it's a hugely scalable system that we've built. I'm just going to talk about like how we're going to market. I think that's really interesting as well. Just quickly, I'll finish up soon on this. We're basically like copying a very similar model that Xero used, and we've got Leanne Graham on our board, so it's been intentional like this. But what we're going to do is, we're going to do a lot of like Google AdWords to these providers. We're going to do, your basic, meta marketing as well, Facebook, and like this is a tried and proved sort of model, and we've already tested it before. It's quite interesting actually. Like we know the market's there, so every time we run a Google AdWords campaign, we get the leads in. So a lot of our time's going to be spent collecting leads from digital marketing is the way that we're going to do that. But we're also going to copy something else that Xero did, which was having lots of little events for providers. And this is going to be more of a soft sell rather than a hard sell. So, we've got the sales teams and all that sort of stuff, but we're also going to have this soft sell version of, having an event, having some speakers there, giving information back to the providers as well. So that's really our route to market, and that's how we're doing that. So I think I'll finish up there. Thanks for your time, everybody. And we've got our table outside if you want to come and find out more. That's it. Thank you.
Thank you, Jamie. That takes us to morning tea, and we are back at 11:15.